Hi, I'm John Diaz, broker-owner of First Nation Realty. I hope you find this presentation useful and valuable to your buying process.
Welcome to our first-time homebuyer presentation. Today we will learn about the benefits of owning a home, steps to purchasing a home, and the guide to financing. The benefits of owning a home, renting versus owning. Renting has its advantages, and the number one is that you don't have to put a down payment. There's no money down. There's little or no repair responsibilities, depending on your lease. Sometimes it's $50, $100, $150. The rest is up to the owner. There's also short-term leases provide you greater mobility. It's easier to get up and move somewhere when you're just renting. Now, the ownerships of owning a home are significant. Some of those include mortgage payments can be very similar or comparable to what you're paying in rent now. You can save large money in taxes. It promotes financial security and stability, builds equity in your loan, and over 30 years your home could be paid off and you have that significant asset versus you would have just spent all those years paying rent. You can also get involved in your community, express your individual creativity, decorating your home and your landscape. Interest payments and the mortgage payments can be tax deductible. Owning a home is a great choice. Next, I'm going to be going over why now is the best time to buy. There's 6 major reasons for this. The first one is inventory. There's plenty of inventory available. There's 9.7 months supply of inventory in Palm Beach County. More than half of those are foreclosures, HUD foreclosures, bank-owned foreclosures, corporate-owned properties, and short sales. But there's a great opportunity to pick the house of your dreams right now. Also, we're at rates on the mortgages are at an all-time low. If the rates over 30 years have probably been like 6.5%, and right now, even if they were down to 3.94%, but using a conservative figure of 4.25 on a $248,000 purchase price. The difference between the average rate of 6.5 and 4.25 is $336 per month. That is the $336 over 30 years is a total cost savings of $121,000. So you'd be saving $121,000 in this scenario just because you're buying today versus a future date where rates may go up. Also is affordability. The average price of a home today in Palm Beach County is down to $248,900, down significantly from prior years. Also, even though the market has been flat or down over the last few years, it will rebound over the long term. And over the long term, real estate has appreciated on a national average at about 3% per year. So on a $225,000 home, it's going to double in value over 30 years. So, it's a $250,000 appreciation over the long term. Plus your mortgage is paid for. There's also some tax advantages. The IRS allows you to deduct the mortgage interest, the real estate taxes, and the mortgage insurance premium, which we'll cover on later if you have it on your loan. Also, because the affordability and that the prices are lower, your assessed value, the taxes are assessed at a lower rate today than they were in the past. And that's a long-term savings and the lower taxes. There's also what's called tax portability. If you are paying taxes on a $200,000 home and you trade up to a $400,000 home, you would continue to pay the same taxes you were buying before. There are some stipulations on that, which we'd have to go over later or seek a tax advisor. Also, you can homestead your property. If it's your primary residence, you get a tax savings. You don't pay taxes on the first $50,000 of the property. So those are significant when you put those together, tax advantages of buying a home. The steps of purchasing a home. Number one is you're going to look to get pre-qualified for a home. That's very important. Because when we make an offer, we need to have the approval letter to make your offer stronger and allow us to negotiate better. So pre-qualifying is the first step. Finding the home, making an offer, which our service is free, and we help negotiate those offers for you on our VIP buyer program. getting the financing, the mortgage, closing on your mortgage, and then finally moving in and enjoying the property. Determining location, obviously you want to consider proximity to your workplace, the neighborhood, property values, community services, the schools, the shopping, and personal tastes. You want to pick a real estate broker that is knowledgeable, has negotiated a lot of properties, has information available so that they're able to arrange your showings and show you, they have a VIP buyer program that helps you and is free of charge of you. And they also help you understand the financial situation and process. When choosing to determine fair price, what will the home sell for in your area? Does the neighborhood meet your needs? Is the house in your price range? That's where your real estate agent will be able to do comps of the ones that sold in the area, determine what the price per square foot is, how that price per square foot varied versus other ones. Going back to affordability, today you find that the price per square foot, maybe it's $80, $90, $100. It's less than what it would cost you to build on that basis. It could cost you $100 to just build, over $100 to build a property today per square foot, and then many times you're buying it for less than that and the land is free. So that's how you know you got a really good deal and why now's the time to buy. During the next step in the process is to make an offer. We would negotiate the prices. There's various items in the contracts, from sale prices to inspection periods to closing costs and the mortgage, financing contingencies. Make sure that, if your financing falls through, you're not stuck for any money, that you'd be able to get out. Those are the things that your real estate agent would help you with, that and the closing conditions and the dates. Pretty much everything is negotiable. It is a buyer's market. I do tell people you got to be reasonable, and you got to look at the price per square foot again. If the price on the home is at $100 per square foot, obviously there's more room to negotiate than the same home that's priced at $80 per square foot. So that's one of the key things that your real estate agent can help you with. Negotiating down payment, financing, dates, locations, inspections, expenses on your closing, and selecting the title company.
Hi, for the financing part of the presentation, I'm going to be handing you over to Jose Morales, our senior mortgage consultant. I have worked with Jose for years, and he has consistently beat out the banks in their interest rates. He's helped our clients obtain better rates consistently throughout the years. The banks are not the best place to go these days for a mortgage. Due to all the foreclosures they have been illiquid in borrowing money from the government called the TARP program. Some of them paid it back and some of them have not. But because of all their foreclosures, they're not the place to get the best rate. Jose has helped our clients get better rates. He has also helped many of my clients get approved when they were turned down by the banks. So with that, I'll hand you over to Jose.
This part of the presentation will deal with the financial aspects of purchasing a property. There are four main types of loans, and there are several other offshoots from this, but these are the main. Conventional loans, which is a loan where it requires anywhere between 5 and 20% of down payment. You have FHA loans, which are one of the most popular today, which are loans insured by the Federal Housing Administration, and as such only requires 3.5% down payment. That's why they are very popular. Then you have the regular VA loans and USDA loans, which neither one of them require any down payment, but those are for specific situations. So we will focus mostly on the FHA loans. The application process consists mainly of 4 steps. Pre-approval, you come to us, we check your credit, we verify your income and your tax returns and everything. We issue a pre-approval letter. You go look for a property with one of your local agents. Then you provide a signed purchase contract, and then we provide a set of disclosures for you to sign, and then we submit that to your loan to underwriting. 4 main things that the underwriter will consider when evaluating your loan: the down payment, income and employment history, your assets, and your credit history. Down payment, it's like we mentioned earlier, 3.5% of purchase price. So let's say $100,000 house, your down payment would be $3,500. In a conventional loan, it would be anywhere between $5,000 and $20,000. And what determines that is if you happen to be a first